The next presenter that we've got is Barry Burns. Barry Burns is a great trader in his own right. What I like about Barry is today he's going to talk about his 5 energy method for timing his trades. You're really going to like this one. I hope you enjoy the session so far. Let's go ahead and bring Barry on. Barry, let's see. I can't unmute you, Barry. You're going to have to unmute yourself. And Dano, yes, I'll put that link in for the free stocks and commodities in just a second, as soon as we get Barry rolling. Barry?
Yeah, hi there, Jeff. How you doing?
Yes, I thought we were going to have an issue there for a second. I'm doing well. How are you doing?
I am on top of the world and flying higher by the minute.
Why did I have a Carpenter song jump in my head when you said that? Not
I
that
don't
that's a
know.
bad thing. Not that that's a bad thing at all.
Oh no, I love the Carpenters. Boy, now we sound really old.
Yeah, and now about 40 to 50% of the room is going to be humming that particular song in their head for the rest of the day. So,
Well, that's not a bad thing. It's a good song.
all right, I see your screen. I'm going to get out. We're on time. How crazy is that? I'll let you get started here.
Okay, and Jeff, just real quick. So just to be clear, I have about what 45 minutes to do my part of the presentation, and then 15 minutes for you to finish things up and introduce things. Is that correct?
Yeah, you can go a little bit longer than you want. I have a really good gift of gab, so usually I plan about 10 minutes, but do um, just take your time, and then I'll
Okay.
show your add-on that we worked on a few years ago.
Yeah, perfect. Okay, good. I just want to respect, the other speakers and make sure we stay on schedule. So excellent.
For sure.
Okay, well, thank you, Jeff, and thanks to everybody over at MetaStock, and thank you also to Stocks and Commodities Magazine for sponsoring this. Great magazine, by the way. I got to tell you, I have subscribed to Stocks and Commodities Magazine. Well, I'm a current subscriber, and I've been subscribing for, oh my gosh, I don't even know how many years, but many, 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 many years. Best magazine ever. I continue my subscription because it's just amazing. I look forward to every issue that comes out every single month, and their bonus issue as well. So yeah, if you guys don't subscribe to it, you're really missing out, seriously. So, and I don't get paid to do that. I'm an actual subscriber. So it's just a amazing magazine. So yeah, be sure you get on that with all the bonuses that they provide as well. And also, I got to say, MetaStock too. Again, I'm a user of MetaStock. So MetaStock was the very first charting platform that I ever used, and still using them today. So that says a lot too, because as Jeff just indicated, they've been around for a long, long time. And I've been around for a long, long time. I actually started trading 51 years ago. Can you believe that? I've been trading for 51 years. I know that sounds crazy. See my little picture down there and you're like, Barry, you don't even look 51 years old. Well, I'm 59. Dang, in 60 days, I'm going to be turning 60. That's kind of crazy. Okay, just made myself depressed. But anyway, my dad was a stock trader, and so he started teaching me trading when I was 8 years old at our dining room table at our little 2-bedroom brick house in Detroit, Michigan. And so, yeah, I've been around those for a while. Way back in those days, we didn't have initially computers, let alone the stock software, because we didn't have hardware. We had black and white TVs. But when I did get a computer, and when I did start using software for the computer to trade stocks, MetaStock was the very first program that I got. It just happened to be that my the first school that I went to, the first formal school that I went to, the gentleman there used MetaStock, and so that's why I used MetaStock. And gosh, it's just served me beautifully ever since. So I'm just thrilled now to go from user to actually working with the company. To me, that just seems amazing, and just thrilled to be here and to represent, so to say. All right, so let's see what else we got on our slides here. Oh, well, a little introduction about me. I am the author of Trend Trading for Dummies, so part of the famous Dummy series of books, and of course, Stocks and Commodities Magazine. I've received Reader's Choice Awards from them for quite a few years now, which is awesome because it's voted on by well, people like you, they're actual readers, they're subscribers. And so to me, that really means a lot because it's voted on by real traders. And I've contributed to other authors' books, worked for a lot of different, or I've done presentations for a lot of different companies. Here's just a few of them. Don't want to go into a lot of details there, but just to let you know, I've been vetted by some, pretty darn reputable companies out there. Important that I'm sure Jeff covered this earlier, but I think it's important because I know people go in and out of these webinars based on their schedules. So it's important that we cover regulatory statements as well. I'm not going to read every word here. I'm sure you don't want me to, but let's talk about this real quickly because it's very, very important. Very important. A lot of people think these regulatory statements are just legal jargon, but they're not. This is really one of the most important parts of your education. And I say that because if you think about why do these regulatory statements exist, it's because people got hurt financially. They got hurt so bad that the regulators, which it takes a lot to get a government agency to move. So that's how bad people got hurt. It took a bunch of people to get hurt really, really bad, and you don't want to get hurt really, really bad. So that's why, again, so many people just look over this stuff and gloss over it. You need to really look at this and say, okay, this is here for my benefit so I don't get hurt. So this is where your education really begins to protect you. So this is serious stuff, and it is very important for you to understand. Now, I can see the question box, and so I want to ask you a couple of questions here so that I can customize the presentation for you. And obviously, I've got pre-rendered slides here, as you can see in PowerPoint. No question about that. But I can customize it since I'm here with you live for you. Spend a little more time on some things, a little less time on others. What do you want me to focus on here? So if you would type into the question box what your most common trading problems are. Most common trading problems, struggles, or frustrations. So let's see what you got here, and that will then help me to focus on what's most important to you. So we've got Scott saying timing trades, Johan saying present volatility. Very good, Johan. We've got, oh my goodness, I'm going to just say Patil, how to exit a trade. Okay, very good. Absolutely. Ivan, pulling the trigger. BB, hey, that's my initials. You stole my initials. Early exits. Okay, very good. M to when to get out of a trade. Very good. Pierre, exit timing. Good. Mark, stops. A different Mark. Great stocks sell off with no news. Analyst downgrade. Okay, right. Sometimes that does happen. Absolutely. Magudi says losing money. Yeah, that's a big problem. Minimizing losses. Stop out early. Mark picking options and determining length of op. Oh, you're an option trader. Okay, very good. So everything I talk about here, by the way, will apply. I'm glad you mentioned that because what I'm going to share with you today will apply to options, stocks, futures, Forex, and it will apply to pretty much any time interval, whether you're a day trader or a swing trader. So let me just address that right away. Kapil, enter trade at the right time. I'm going to definitely talk about that. So all of you who've been saying here when to get in and out of a trade, be able to answer that today for sure. Rate riding winners. Augustine, high frequency trading. Okay, well, that's a technology issue, which we're not going to be able to compete with the HFTs, but it's a good point there, Augustine. Mark, how much profit to expect in a swing trade? Walt, timing to invest. Mike, using any system, it is trying to find the stock to trade offering. Okay, MetaStock is fantastic for that, by the way. That's one of the reasons I love MetaStock is an amazing scanning functionality to it to help you find stocks that are just, and by the way, the top dog trading system that I'm going to present to you, built right in, it's awesome. How to start under $1,000. Mark, Robert, data costs, good. Shirley, that's my mom's name. Shirley, want to trade options. Roger, looking for a good trading system. Okay, I'll share that with you today. Very good, Roger. Okay. Awesome. So you guys are right on board. Everything you guys are wondering about, I'm going to be able to help you with a little bit today. Now, let me do this. This is an exercise, really, that I want to help hopefully bring a revelation to you. So I did a survey actually of the same question that I just did with you. Well, I did the survey with over 10,000 traders. And I want to share with you the results. And the reason I want to share this result with you is, well, really to help you. And I'll get into why this is going to help you in a minute. But here's the most common answers that I got to this question after interviewing over 10,000 traders. And these were the results. Number one, entering the market, they said, here's their problem. They enter the market, then as soon as they get in, well, soon after they get stopped out. And then that's not the worst part. But then after they get stopped out, then the market turns around and goes back in the original direction of their trade. Any of you had that problem where it's like, yeah, you get stopped out, but then what's more frustrating is, dang, you would have actually made money because the market does go in the original direction of your trade. So that's one. Another one they said is they get out of big moves too soon, and so they don't make the full reward out of the opportunity that they traded. A lot of you mentioned that one already. Another one is getting stopped out too often, where you just get stopped out and it just totally turns into a loser. It doesn't turn around. Not knowing the best place to exit a market. Now, again, a lot of you listed that one. And number 5 was trading a trend that doesn't follow through. So again, I wrote the book Trend Trading for Dummies, so I'm very familiar with trends and people talking about, you know what, I trade a trend, but when I get into the trend, well, that's exactly when it ends. Again, any of you had that problem where you figure that, oh, here's a trend, okay, you can watch it go up and up and up and up and up until you get in. And dang, it just seems like as soon as you get in, well, that's when the trend ends. Like almost like you're a personal human counter trend indication in yourself. Okay. So the reason I want to show you this and the revelation here is that if you have these problems, which obviously a lot of you do, since you already indicated that, here's the takeaway. You're not unusual. Out of 10,000 people surveyed, these were the top 5 problems. So you are not an unusually bad trader. Your problems are not unique. Sometimes we can think that, oh, we're the only ones who have these problems, or our problems are unique, or there's something wrong with me, or, you know, I should be able to do better. No, these problems are very, very common, and you are not the only one. In fact, these are the problems that the masses have. And now the best thing is there's a solution. There's a solution to every one of these problems because every one of us, including myself, has had these problems and we've overcome them. And that's what I want to help you do today. So the good news is there are solutions to every one of these problems. So that's what I want to present to you today is how I also had these problems and overcame them. And how I overcame them was by putting together a methodology. And this, again, that term methodology is very, very key. In other words, there's no one solution. Okay, so again, I'm going to be really real with you here in that there is no one-to-one correspondence between, for example, an indicator and making money, or a candlestick pattern and making money, or a multi-bar price pattern like head and shoulders, wedges, double tops, triangles, whatever, and making money. So there's no one thing in trading, no one technique that directly makes you money. What makes you money in trading is having a methodology where you put a bunch of these things together to create a probability scenario. Now, my trading methodology is measuring what I call the energies in the market. What do I mean by energies? Energies of money. Money flow. In fact, if you want to use the term money flow, that would be fine. So here's my methodology. I put 5 different uncorrelated energies together, and I look for them all to align. And when you think of a probability scenario, which is what trading is all about, right? There's never any certainty in trading. There's never any, we can't have 100% confidence. All we can do is put together a probability scenario where over a large sample of data, we come out ahead. That's what makes trading different than gambling. And how do we create a probability scenario? Well, again, we have 5 uncorrelated variables that all align being bullish or bearish. Then we take the trade. The odds are on our side. We employ risk management. We employ money management, and we employ mind management, the psychology of trading. So here's the 5 energies that I look at. Number 1, and by the way, really important too, I only use these 5 things. Are there other good things you could use? Yes. Yes. So why do I only use 5 when there's other good things? Because I've got to, as I said, manage my mind. And so even those, there's other, and I get this asked all the time, but what about this? What about that? Isn't this good? Isn't that good? Yeah, it's probably good. Yeah, you probably could use it to make money. But the reason I don't use those things is because in order to manage my mind, I've got to keep my methodology simple enough that I can handle it psychologically. In other words, to put it very clearly, I want to eliminate mental overload or mental overwhelm. You cannot trade with mental overwhelm. You've got to keep your method simple enough that you have clarity. And then the other thing is these 5 rules or these 5 energies are a system, a step-by-step system. So it's orderly. So now psychologically, a lot of people come to me saying, Barry, I know how to trade. I know technical analysis. I know these indicators. But for me, the problem is psychology. These are the first 2 things I take them through. Okay, let's eliminate everything you don't need to make money, even good stuff. We'll eliminate some good stuff just because you don't need it to make money. And let's create an orderly system. So when you look at your trading methodology, it's step 1, then step 2, then step 3. This allows you to protect your mind. So here's my method, 5-step, 5-energy method as Jeff mentioned. So the first thing I look at is trend. Makes sense. What's the direction that I want to trade? Whether you're trading stocks, Forex, futures, options, very first thing is what direction do I want to trade? Now, there's another distinction here in trend. Trend is about direction, but also we all know, well, I shouldn't assume this, but there's a famous saying that most of us probably know, the trend is your friend until the end. So the learning moment from that very popular saying is really not just about direction, it's also about timing. The earlier you get into a trend, the higher the probability that that trend will follow through. So step 1 in the methodology is trade early in a new trend. Okay, because at the end, it's not our friend. Now, step 2, momentum. Momentum is the strength of that trend. So even if you're early in a new trend, you don't want to trade it unless it's a strong trend. All right, so that's muy importante because trend is just direction, but direction could be like you walking north. That has 0 leading properties. Your direction is north, but you could turn around and walk south with 1 human footstep. Now, as opposed to a locomotive, like a train, well, locomotive is an old-fashioned term, shows you how old I am. Let's say like a bullet train, that's a little more up-to-date term. So a bullet train going north at 100 miles an hour has momentum, has velocity, 100 miles an hour, and mass, a lot of weight to it. And it's a leading indicator. So we all know if you put the emergency brake on that train, it's not going to stop within 1 human footstep. So momentum is very important in direction. You put them both together. All right. And then number 3, cycles. This is the timing of the market. So number 1 and 2 define the type of market we want to trade. Early into trend that is strong, a lot of velocity of orders going through, a lot of weight, a lot of volume. By the way, that's the equivalent of momentum in the markets. Speed, lots of order flow coming through very, very, very fast. Number 2, volume, that's the equivalent of mass. Then we look at, okay, when do I want to get in? 1 and 2, I've got the type of market I want to trade. Step 3, the cycle is, and I'm going to show you my cycle indicator today. When do I want to get into that market once we have those conditions? Step 4, buying off of support, selling off resistance. And energy number 5, looking at the next higher time frame And that's my 5 energy method. When all 5 of those are bullish, I'll take a trade. When all 5 are bearish, I'll take a trade. It's literally a 5 step, well, checklist, if you will. 1, 2, 3, 4, 5. And I take them in that order. Why? Again, to keep my mind orderly. So at each entry point, we ask how many of those energies are aligned. Give each setup a score of 1 to 5. Obviously, the higher the score, the higher the probability of success. I kind of liken this to taking each trade to court. 5 independent witnesses to establish a preponderance of the evidence. The operative word there is independent. So now, sometimes people misconstrue this. They say, oh, so all I have to do is put 5 indicators in a chart and I can have my own 5 energy method. Not necessarily. They have to be independent. You could put 5 indicators, but what if all 5 of those indicators measure trend? Great, now you got 5 different instruments, but they all measure the same energy, direction. I mean, that would be the equivalent of putting 5, I don't know, 5 speedometers on the dashboard of your car, right? I mean, it'd just be silly. So no, there's a strategic way in applying this. And these 5 energies are each uncorrelated to the other. So let's take a little look here and bring up a chart and see what this looks like. In fact, let me bring up my little spotlight here. Okay, so as you can see, I've got 2 time frames, as we said, 10-minute on the left, 30-minute on the right. Again, I got to bring up some time frames. This could be a daily and a weekly chart. This could be a 1-minute and a 5-minute chart. Time frames are up to you. Got Starbucks here. Again, that's really inconsequential. The only thing that I will say about the markets that we trade are that from my methodology, we want to use a method that has professional involvement. So I don't personally trade penny stocks or pink sheets. I'm not saying you can't trade those. I'm just saying from my methodology, I don't, because I'm looking at the energy of money flow and I like to have professional involvement. Essentially, I'm looking to trade a market that professionals are involved, big money's involved. That's where the momentum comes in. And I want to hook my wag into the whales, so to say. The big money is the whales. So I take my money, I put it in my little red wagon, and I tie a rope around the handle of my wagon. And then I take the other end of that rope and I tie it to the tail of the whale. And away it goes. And I just, if you can't beat them, join them. I can't beat the professionals, and neither can you. The institutions, no, we don't have the kind of funds and accounts to be able to beat them. We don't have the research. They're hiring people out of MIT with PhDs in mathematics who could do Greeks in their head. I can't do that. So, hey, if you can't beat them, join them. And so I just follow the smart money. Okay. And so that's why I like professional involvement. So here's an example of what I'm talking about so you can get a visual of the 5 energies. Number 1, starting a new trend. So I use just the 50-period simple moving average. That's this red line here. And that's my trend. Right? Very simple. Number 2, momentum. So this is my momentum indicator, the Top Dog Trading Momentum Indicator that comes with the plugin for MetaStock. And it's moving on up. That's what we like, moving on up. All right, number 3, cycle low. This is our cycle indicator, Top Dog Trading. It's a modified stochastic indicator, by the way, but it's pre-designed for you, preset, pre-modified. And this little pattern down here is the key. This little pattern lets you know that that is a very high probability cycle low, called a mini divergence. Okay, we got support of the 50 MA, and then we look over here at the longer term time frame, and we've got momentum angling up. So some people teach trading in the direction of trend of the longer term time frame, and that's fine. I like to really focus on momentum of the longer time frame. Why? Because momentum is strength. Remember, it's like that bullet train. And so I like to have strength, momentum on both time frames going up, because that's what makes the market really well. Look how the market just explodes out of that. Why does it do that? Because we've got a velocity of orders. When I went to Chicago for a while. I got an apartment out there at the Chicago Mercantile Exchange, hired a floor trader to work with me. And what I noticed was I'd look into the trading pits down on the floor, and momentum in the market is velocity times mass. So velocity means the speed of the orders come through. I'd look in the pits and I'd see all these guys with their fancy jackets and all this, and man, orders going through, and you could feel it. It was not just something in our charts, right? There was a visceral experience in the pits where people are pushing, shoving. Literally, it's very physical. Once in a while, even fistfights used to break out back in the days of yore. That's how visceral it was. But yeah, you could feel the energy in the room and the volume of the room, not just the volume of the orders, but I mean, the audible volume of the room would get loud. And so why? Because everybody's buy, 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 going crazy, crazy, crazy. That's the velocity, the speed of the orders. And then the other part of momentum is what? The mass. So we equate mass to the volume. Volume now being the size of the orders, not just how many orders, but the size of each individual orders. Here I'm referring to block trades. So the institutions placing large orders, and you could look in there and you could see, their identification with their codes, their name tags and so forth, their patches. Excel, Merrill Lynch, Goldman Sachs, Citibank. These are the big whales. And so, yeah, that's going to cause the market to explode. So we can map that. Now, you don't have to be in the pits. Most of the pits are closed down these days anyway. But the charts are maps of what's going on at the exchange. They're mapping it. And our goal as chart readers is to learn to read the map of the market. And that's what that literally means. So sometimes I think people who read charts think that these indicators and everything move the market. No, they don't move the market. They're just mapping what the market is doing. Okay, so my favorite trading technique for pinpointing market highs and lows for entries and exits. Most of you, when I asked you what your challenges were, it was about entries and exits. So I'm going to give you right now the solution for a good cycle indicator. I encourage you to write this down and get a pen or paper out because this is amazing. I actually sell this. I'm going to give this to you for free today. This is something I normally sell, and I'm going to give it to you absolutely free. So we need the right indicator in the inputs, and here it is. So we take our stochastic indicators. I mentioned in passing, the cycle indicator I use is actually just a modified stochastic. So how do we modify it? Well, we take our good old-fashioned stochastic indicator created by the genius George Lane, and we change the inputs or the parameters. So K, which is your actual stochastic line, I changed to time period of 5. In a lot of trading platforms, that's defaulted to 14, but we're going to change it to 5. For slowing under K, we're going to change that to 2. Dos, zwei, duo, that's Korean. De is French, similar for some reason. Ni, Japanese. I'm pentilingual with the number 2. And then percent E, which is really just a moving average of the smoothed K. We're going to change that to 3. Okay, and then method simple, a simple moving average, because it is a moving average. Okay, so those are the, I'll leave that up for just a second. These are the parameters we're going to change it to. And this will turn it into a cycle indicator when you trade it the way that I'm going to show you. Now, the stochastic indicator is created by George Lane, was originally created as a momentum indicator. That's very important because we're going to still use that, but what we're doing is we're minimizing the number of bars that it's measuring momentum over. And that's going to turn it into a cycle indicator to help us nail swing highs and swing lows to time our entries and reduce the number of times you get stopped out. So this is going to, again, help us pinpoint entries and exits with amazing precision using this tool. All right. Oh, and then by the way, we had 3 horizontal lines on it, and those are going to be 20, 50, and 80. Okay, these are not normally the defaults in most charting platforms. So again, write that down. 20 and 80 will be upper and lower horizontal line. And then I put a line right through the middle of the range of the indicator at 50. All right, let's see. I guess we just have that list over here on the side, even though it's there on the screen capture. Okay, cool. All right, so we got the rate indicator. We got the inputs that are changed. Now, by itself, remember, as I said, this indicator, even as modified, really is meaningless. Oh, that's great, Barry. Thanks for giving us a meaningless indicator. Well, no, by itself, it's meaningless. So we must only use it when it's strategically aligned with the other energies. So each one of these tools, an indicator is a tool, it has one purpose. And the purpose of this tool is to help us nail swing highs and swing lows. But that doesn't mean that we trade every swing high and swing low. So again, we have to use it with the other tools. So we're only going to trade cycles in the direction of the trend early in a new trend, right? That's what gives us the direction and a good reward to risk ratio. We're also only going to trade cycle highs or lows that have long-term momentum behind them. And we're only going to trade cycle highs and lows that have the fractal energy aligned. Fractal energy meaning the longer term time frame. And in our case, we're referring to momentum on that longer term time frame. So all these things have to be aligned. 5 uncorrelated energies giving us a probability scenario. Now, the last thing that I haven't addressed yet is we're going to look for a certain indicator pattern. Just like price bars have certain patterns that are tradable, indicators have patterns that are tradable as well. And what we're going to use is what I call second chance indicator patterns. So this is why we have to do a tutorial on this, and we don't just give you the parameters and say, okay, go have fun. You won't have fun. Believe me, it will not be fun. So what are these second chance indicator patterns? Remember, the stochastic indicator measures momentum. So when we've reduced it now to 5 bars, remember we changed %K to 5, we're going to find momentum shifts at cycle tops and bottoms. And we're going to look for what I call a mini divergence. Now, there's actually 6 of these second chance cycle patterns. So I'm going to share with you the mini divergence right now, but understand there's 5 other patterns that help you determine that you found a high probability cycle high or low. Okay, let's bring up some charts and take a look at it. So first of all, how to trade cycles accurately. Here's what we want to avoid. So here we got our cycle indicator. All right, and K is the blue line, D is the moving average of K, so it's the legs behind it. And here's what a lot of people will teach. All right, it goes back, here's the 15 EMA, that's the 50 EMA, and it goes up here, and it looks like a cycle high. And it is. But if you shorted here, then the market went up higher, and it turned out that, oh, the 50 MA held as resistance, and then it goes down. So this is what we want to avoid. We want to avoid getting short here and then getting stopped out. Okay, that's the problem. So how do we do that? We use these little mini divergence patterns. So here's what it looks like. Okay, now we use a long example. Again, we retrace to the 15 EMA, the black line. That's generally where I look for a trend to retrace, is the 15 EMA. Now we get an equal low on price, maybe a slightly lower low, but look at stochastic, especially K, the blue line. That's really where we're looking for this. A higher low, a higher low. I call this a mini momentum shift. And so what this literally is saying is, again, back to momentum, we put in a low, come up a little bit higher, put in another low, about an equal low, maybe slightly lower low by a penny or so. But look at K, the blue line, higher low. So that means that we came down on momentum. This one, there's a momentum shift. So while price is making a slightly lower low, K is making a higher low. And that is telling us that this move down is weak. And we're looking now, that is a beautiful pattern to find your final cycle low or your final swing low, whatever term you want to use for that. And that will dramatically reduce your odds of getting stopped out. And that is a beautiful entry. I mean, these patterns are just so darn good, it's ridiculous. Like I say, I normally sell this information And you're welcome to add this to your trading. Now, talk about trend reversals. Some of you mentioned, hey, I have a hard time knowing when to get out. Okay, so let's address that issue. Now, let's say we got in on a downtrend and we've been in this trade for a while. Down, 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 down. And look, boom, there you got it again. Lower low on price. But see, now we're in a downtrend. The 50 MA is angling down. So lower low in price, higher low on percent K. Baby, that's a beautiful place to get out right there. Okay, that's going to be your final low, high probability low, and just get out of that puppy. Now, if you wanted to be a little more aggressive, you could actually then, as it says there, do a stop and reverse. And the key here is that the trend is your friend until the end, as we've said. So I wouldn't take a trend reversal if it's early in a new trend. But if you're in a trend that's been going for a while, guess what? The trend is no longer our friend. So what is our friend? A counter trend trade. So if the trend's no longer your friend, doesn't mean you can't trade. It just means you shouldn't trade with the trend. So now we look for this pattern, same pattern, lower low on price, higher low on K, little mini divergence. And we say, okay, well, the trend is no longer our friend. So therefore, counter trend is our friend. And by the way, little tip for you, a trend reversal trade is actually the highest risk reward ratio trade there is in the entire multiverse. Okay, because you're getting in at the end of one trend, and if it, the model at least is to catch a new trend going in the opposite direction. So just these trades now, I will tell you, they do not have the best win-loss ratio, but they do have the best risk-reward ratio. And that's the little pattern. Now, one thing, and I see some comments here, which are good ones. Hold on one second. Let me choose a color. I'll choose blue, and I'll do a little drawing here for you. So I call them mini divergences. A regular divergence, as taught in traditional technical analysis, would generally be between cycle highs or between cycle lows like that. We're doing it within a single low, well, within a single cycle low. So if you look at this, 1, 2, 3, 4, 5. See, there's 5 bars there. And that's the point. Remember, we changed K to 5. That's why we changed it to 5. I want to find just at the single swing low, not between swing lows, not between swing highs. So that's a little distinction. That's why I call it a mini divergence, because we are trading it within a single swing low, just within 5 bars. So mathematically, that's why we changed it to 5. Now, it doesn't only work with trend trades. It doesn't only work with trend reversal trades. It also can work for breakout trades. So here we've got an example where the market's just been contracting for a while. Look, the 50 MA, the red line, is kind of going sideways. Sideways 50 MA, that's a really good sign that the market is not trending. It's just kind of biding its time, going sideways, hasn't made a decision yet. There's no real sentiment for bullish or bearish yet. Okay, but look what happens. Higher high on price, a little lower high on K there. Ooh, we got our little mini divergence, again, within 1, 2, 3, 4, 5 bars. So that's a nice indication that, okay, that's our final cycle high, and boom. I mean, and by the way, what's your risk here? Your risk is about the range of a bar and a penny, okay? Because I'd get in on this below the low of that first black bar there, and I put my stop in above the high of the white bar. So literally just putting my stop in above that high and entering there. So risk, ENC. Now we're fulfilling another very common trading phrase, and that is keep your losses small, let your winners run. These little patterns here allow you to keep your risk minute. I wouldn't even say small, minute. All my trades are the range, or the risk on all my trades is the range of 1 bar to maybe a bar and a half or less. And the reward, well, I mean, that speaks for itself. So, summary of high probability trading. what we want to do again is wait for the alignment of 5 energies. And by the way, uncorrelated energies, I should actually add that word to this slide, to put the odds on your side. So here's my whole trading method. It takes an entire sentence to summarize my trading method. So, and this is it. You might want to write this down too. We're looking to get in early in a new trend. That's energy number 1. That is strong speed of orders, velocity of orders coming through the market, and the volume, big volume, and not just volume, but block orders. Really, if you want to get down to the details, you know, there's an old saying, the dollars are in the details. Well, volume is very important. There's no question about it. It's hugely important. But if you want to slice that to even a more granular level, the most important aspect of volume, the most important subset of volume are block orders. And again, block orders are where you get a single order that's a very large size, and that is a good indication that you've got professional market participation. So early in a new trend, that is strong. At the right time, that's where our little mini divergence patterns come in on our modified stochastic indicator. And then we want to see a cycle low off support or a cycle high off resistance. And if we get all that, 1, 2, 3, and 4, that's awesome, but it's still not enough. Then energy number 5 is bringing up our longer term time frame, our bigger scale, and making sure we're trading in the direction of momentum of the higher time frame. And that is so important that, you know what, I would actually say of the 5 energies, that last one is the most important. The last one is the most important. This will keep you out of otherwise really good looking trades. You ever have that happen where you can find a great trade, the setup looks fantastic, and it doesn't work out? Well, again, solution to that is often look at the next higher time frame and look at not just trend, but momentum on that higher time frame. And I will bet to, well, I'll just tell you, I've had it happen so many times to me, because this is how I came up with this. I came up with this by losing a lot of money. And I wondered, how come all these trades that look beautiful are failing? And finally, one day it occurred to me, and through a lot of trial and error, that dang, momentum on the next higher time frame is against me over and over and over. Studying all my losses, right? I document every single trade I have. I literally, it drives my wife crazy, but I got a pile of, still got them all here, of every single trade I've taken. I document them, I print out my charts, I review them, and I'm looking for patterns. And finally, through that process, I realized, oh my gosh, what the commonality of all these beautiful looking trades that failed was they went against momentum, the strength of market movement on the longer term time frame. And so I added that as a filter, so to say. And this will filter me out of otherwise great looking trades. Think of the longer time frame as like having veto power, the presidential veto stamp. Man, I'll tell you, ever since I added that, my win-loss ratio has dramatically improved. And again, this approach is very robust and adaptable. You can use this for stocks, commodities, options, currencies, futures. Why? Because the whole thing is just about measuring the energy of money flow. Well, how do stocks work? Supply, demand. How do commodities work? Supply, demand. Options, currencies, futures. All of these markets are essentially auction places. And so they all work based on the same principle of, well, as they say, what is something worth? It's worth what someone is willing to pay for it. And in these markets, that's exactly right. So and sometimes you wonder, well, why do things happen in the markets? Why does it move? It's not even logical. It doesn't have to be logical. It doesn't have to be logical. It doesn't matter. What makes the markets move are what people think of it, people's sentiment, for whatever reason. And human beings are not always logical. Sometimes we get what Alan Greenspan called irrational exuberance. I get into not really arguments, but discussions with people who are just so focused on fundamental analysis. In fact, I used to have conversations with my own dad about this because he was very much into fundamental analysis. And fundamental analysis is great. I think, yes, you should learn it. It can be extremely helpful. But at the same time, you have to understand fundamental analysis is based on Well, the market should do this because it's just logical based on earnings and sales and PE ratios and all that kind of stuff. Here's what the market should do. But sometimes people don't care. You can have a company that has impeccable financials, and people just don't care. They're just not excited about it. And then they'll go trade some other stock that has horrible fundamentals, but they're excited about it, and it moves and it goes screaming up just because people are excited about it. And that's why I like technical analysis. It's because it shows you not what the market should, in quotes, do, but what the market is doing, which really is all that matters when it comes to making money. And again, this will work for day trading, swing trading, and investing. I trade all three of those timeframes myself. Again, we're just looking at the supply-demand power of money on any of those timeframes. And it's simple. I mean, we're counting to 5, right? So it doesn't get too much more simple than that. You know, Einstein once said, you want to make everything as simple as possible, but no simpler. Now, I don't believe Einstein traded the markets. I don't know. Maybe he did. I don't know. But I don't think he was a day trader anyway. But I still apply that. And I think that saying applies beautifully to trading. Make everything as simple as possible. Why? To prevent mental overwhelm, again, as we started out. But no simpler. Why? Because we need, again, a number of uncorrelated variables to establish a probability scenario. So MetaStock has made this just beautiful, beautiful for us. Really, I hate to ever use the word easy in trading, but they've made it a lot easier for us. So in the MetaStock plugin, and Jeff's going to go over this, but I just can't resist showing this, you know, because what they do is they just plot everything out here for us so beautifully. So, you know, here's the modified stochastic indicator. Here's an example of Microsoft. Now, the colors down here, they indicate trend. You got wave counts built right in. And so it's all plotted for you here beautifully. But look at this. I mean, then you bring up the commentary here and it tells you what the trade is. It tells you what the trade is. So it's just wave 9 reversal short, tells you what the setup is. There's the commentary. This is what it looks like. There's your confirmation. You talk about what you want to know what your entries are. Okay, a lot of you said that. Well, there it is. There's your entry. Where do I place my stop? There it is. Where do I get out? There it is. I mean, seriously, does it get any easier than that? It just tells you. There is no other software. Seriously, there is no other software on this planet, or as I said earlier, this multiverse that just spells it out for you like that. None. MetaStock's the only one. So that's why I love MetaStock. It's just incredible. Anyway, Jeff's going to get into that, so I better close out here. Again, I'm Barry Burns. Here's my email address. Feel free if you want to ask me any questions later on or questions come to mind or whatever, feel free to email me. I love getting communication from traders. Never feel like you're bothering me. You'll never bother me. I live for trading. I just love this stuff. I got my dad's passion for it. It's a passion we shared, and I still am passionate about it. So Barry@topdogtrading.com is my email. And by the way, also I'm going to give you guys one of my favorite trade strategies for free today. It's called the rubber band trade. And you can get that here at www.topdogtrading.com/free. So that's my gift to you. And that's free for everybody. You can get that. In fact, you know what? I'll type that in. Yeah, I'll type that into the chat box, and I'll type that into the question box as well. So you guys can pick that up as a freebie for everybody attending today. Hundreds of people here today. Really exciting. So that rubber band trade is a complete strategy. So when you get the strategy, you get the entries, the exits, all the rules for it, complete rules about where to enter and exit. You're also going to get one of my free trading courses. So I'm not going to charge you guys for it. I'm going to give it to you for free. This course is how pros trade differently than amateurs, and more information about the cycle indicator. And I got a follow-up webinar where we'll go in deep dive into that. But all of this stuff you can get for free just going to topdogtrading.com/free. But if you want the really detailed stuff, like I said, with everything spelled out for you here in the commentary and all that, well, we've got a plugin for MetaStock, and that's really the best way to go. That's the ultimate. It's the ultimate trading tool. So, Jeff, I know that you have some details you can share with people about that, so I will turn it back over to you, my friend. And thank you, and thanks to Stocks and Commodities Magazine for inviting me here today. I really appreciate it. Always thoroughly enjoy participating with you. You guys have been fantastic, and I just, again, first platform I've ever used, still the platform that I use. I mean, what more can I say? That's, people sometimes ask me, well, what's the best trading platform? Best answer I can tell you is the one I use.
Barry, quick question. Because I
Yes.
can't answer this, I don't remember, but what is the name of your Dummies title book?
Oh, Trend Trading for Dummies.
Okay, there you go. Yeah, MetaStock is the best way to go, but there's always, I definitely would recommend you get this rubber band trade strategy and the course that goes with it, because, $0 is my favorite cost. And it's well worth it. In any case, Barry, thank you for coming in here. Appreciate you spending some time with us. Let me, before I forget, I'm going to change myself to the presenter and show my screen. So unlike earlier. So thank you, Barry. We really appreciate your time today and all of the time you spend in kind of getting everything right in MetaStock and working with our programmers and that kind of stuff. I'm going to go ahead and just kind of show you a few things again. Between speakers, we don't have a huge amount of time to show you kind of the differences of the platform. I know Augustine was, or it wasn't Augustine, but it was Shirley wanted us to kind of go into detail about how MetaStock compares to like a free trading platform, and we're going to do that. I'm going to actually spend an hour going through the tools inside of MetaStock that'll help you to, identify what the best trading strategy is, and scanning we've talked a lot about, and so we will cover that more extensively for sure for you, Shirley, right after Chuck Hughes, who's the next presenter. So. But what I wanted to do is I just kind of give you an idea of how Barry Burns, we're looking at AMD, I'm looking at this on a 240-minute chart. So right here, you can see up in the time frame, it's 240 minutes, it's AMD. You'll notice based on the moving average, this will automatically identify an uptrend or a downtrend for you. And if it's in an uptrend, Barry has what I would call a simplified wave counting methodology. So you can see this is the first wave of your uptrend, your second wave of your third wave, a fourth wave, a failed fifth wave going into a fifth wave. And as we go down here, and as it starts to trend down, you'll notice the trend goes down, and then it's going to start to cap the waves to the downside for you. You'll notice in conjunction with that, I'm going to kind of go over here to the patterns that Barry uses in conjunction with these things, but it's going to give you, all kinds of different entry opportunities depending on where it is in that cycle. So if you're somewhat long in a trend, you're going to be looking at reversals, whereas if it's a new trend, you're going to be looking like for the first or second retrace in a long or short trend. There's also some momentum trades that are in here and that kind of stuff. And those are identified on the chart. I'm just going to switch back to the chart right here. They're identified on the chart by these little arrow signals. So you see the little arrow just right now. You see an arrow that's kind of back here a couple of days right before this. And if I highlight over it, it'll actually tell you the reason you're getting a signal to go short there is because this is the first retrace in a short trend. Okay, you can kind of come back here. There was another long trade right here that didn't work out. Not all the trades work out. Here you had a really good long based on a triangle pattern. Okay, so those are all identified for you. Of course, we use the commentary. The commentary is by far one of my favorite features in MetaStock. And I'll just show you this real quick. View expert commentary. Okay, and when I open up this commentary, it's going to default to this very last bar. Okay, it's going to give you some momentum wave counts. Right now, we've got a second retrace in a trend to the short side. Okay, so initially it's going to give us an entry price. We'd want to get into this at 1947. We'd put our initial stop in 2160 unless it's Forex, and then we'd follow this particular rule here. It gives you the targets. Okay. One of the things is Barry provided so much good information about the different patterns that we actually literally couldn't include everything in the expert advisor. And so what we did is we actually have, if you just click on that link here and you want to go into some detailed analysis of that, you can actually go in and it'll actually talk to you about the setup, the confirmation, the entry, your initial stop, the targets, how to look at this and increase the probability of success with this, and any additional commentary that you've got loaded. So initially what we tried to do with this is actually give you exactly what you needed to know. Okay, here's the entry, here's the initial stop, here's where I'm going to look for targets. But then we also do offer the full analysis of the signal. Okay, you can go back in time and see, hey, what did it say at this short right before this run down? It'll give you that. You can kind of do this to do some historical analysis and really increase your understanding of how a trade looks. In addition to that, of course, we do have the scanning. So if we open up the Power Console here, we're going to go to the scanning tab, and you'll notice we'll have the top dog trades. You've got the rubber band trades, you've got the trends, the triangles, the sevens, the nines, and then just a wave counter type of a scan. So you can run this. Let's say we wanted to find a dad trade. We could just run this. We'll go ahead and start an exploration on, again, my pre-filtered list of optionable securities. And it's going to go through and load that all in for us. So it does a really, really good job of kind of taking Barry's methodologies and helping you understand exactly what they're doing and implementing them into the stock as well. So you'll notice right here, if we're just looking for a top dog trade, it's eliminating 99.4% of the stocks that it's looking at. What we want to be able to do for as traders is we don't want to look at 2,500 stocks. What we want to do is look at the stocks that actually have an opportunity. Maybe we're looking to go long or short. This list right here is only going to be those stocks that either have a long. If it has a 1 here, it's going to be a long. If it has a short here. And so already we're saving time. We're enabling ourselves to be able to focus efficiently and effectively in the marketplace. Some of the things I absolutely love about MetaStock, and we implement them in every add-on that we do. So let's go back here. Let me just kind of talk a little bit about what's included with this particular add-on. So all of these patterns are identified. You can scan for them all. You can open up a chart. They'll all show up for you. We also include a lot of various very specific indicators as part of the install package that'll get plotted on your charts for you. There are 3 different ways to look at the chart. We've got the daily, the intraday, and a weekly chart that you can look at. The cost on this, the Top Dog Trader, is normally it's just a one-time cost of $499. Here at the Summit, if you buy any of the add-ons that we're focusing on today, you'll get that cost for $399. You can take advantage of that. You can give us a call at 800-882-3040 or visit us at metastock.com/saleschat. I would also encourage you to take a really close look at the Trader's Toolbox. It's a collection of some of the best add-ons, 4 of the best add-ons that we have available. Some of our most popular ones. People love these things. So what you can do, what we've done with that is we've bundled all 4 of those add-ons, 2 years of stocks and commodities, 3 years of our award-winning MetaStock real-time platform, as well as our new service that we power with Thomson Reuters, a course that's called Unleash the Power of MetaStock that's going to help you kind of go through and learn everything. Normally, all of this would be individually priced at $4,138. We've basically given you a discount of more than half. So if you want to do that, you can do it today. It's $1,796. Give us a call. The phone number for that is 800-882-3040, or you can visit us online at metastock.com/saleschat to take advantage of that. I know you guys have a lot of questions. I'm going to answer those in the chat, but I want to keep us on time today. We still have several hours to go. Want to make sure all of the presenters have plenty of time to talk to you. So watch for my answers to come in through the chat. Thank you for all of the questions. Okay. I do want to spend a second though, and it's worthwhile to talk about our sponsor, Stocks and Commodities Magazine. They're going to give you a free issue of the Stocks and Commodities today. If you buy anything today, you're going to get at least a 3-month subscription to Stocks and Commodities Magazine. If you take advantage of our toolbox or you spend more than $300, I'm sorry, a 5-month subscription. If you spend more than $300, you'll get a complimentary 2-year subscription. If you didn't when you registered, make sure you go get your free issue of it. I'll paste this in the chat as soon as we get Chuck started. Part of that free issue, you'll be able to go in and you'll be able to see 17,000 articles. All of the issues that they've actually printed before. they give you access to every single one of them. So it's a great magazine. They've been in the business since 1982, and they've been kind enough to sponsor these summits for the last 5 years straight. So we really appreciate that, and I'd encourage you to check it out.